Google's ubiquity seems to qualify it as less of a search engine and more so the search engine. Its cultural imprint runs so deep that Google has a verb and many people use it as their default browser page. According to StatCounter, Google has an astounding 92% share of the global search engine market. Fourth quarter results for 2021, as announced by Alphabet on February 1st, 2022, beat all Wall Street revenue and profit expectations. The company generated revenues of about $75.3 billion based on record sales of Pixel, as well as YouTube strength, growth in the Google Cloud division, and robust advertising growth despite changes to privacy settings in Apple's iOS 14 that affected ad revenue on some online platforms. But we can't ignore that 2022 has come with its own perks and downfalls, and Google is trying to pull some tricks off its sleeves. Hello there, guys. Today, we'll share with you how much is Google worth in 2022. So make sure to like the video and subscribe to our channel, as well as hit that notification bell to stay updated. Google is an American multinational technology company that focuses on search engine technology, online advertising, cloud computing, computer software, quantum computing, e-commerce, artificial intelligence, and consumer electronics. It's been referred to as the most powerful company in the world and one of the world's most valuable brands due to its market dominance, data collection, and technological advantages in the area of artificial intelligence. It's considered one of the big five American information technology companies alongside Amazon, Apple, Meta, and Microsoft. We all know Google today as a giant in technology, but how was it started in the first place? What are its basic philosophies that made it one of the world's best employers? Google was founded on September 4th, 1998 by Larry Page and Sergey Brin while they were PhD students at Stanford University in California. The company went public via an initial public offering in 2004. In 2015, Google was reorganized as a wholly owned subsidiary of Alphabet Inc. Google's corporate philosophy includes principles such as you can make money without doing evil, you can be serious without a suit, and work should be challenging and the challenge should be fun. As of September 30th, 2020, Alphabet Inc. had 132,121 employees, of which more than 100,000 worked for Google. Google's 2020 diversity report states that 32% of its workforce are women and 68% are men, with the ethnicity of its workforce being predominantly white 51.7% and Asian 41.9%. I mean, who wouldn't want to work for such a company? Worth of Google in early 2022. To realize the most accurate picture of a company's worth, it's important to consider both market capitalization and shareholders' equity. Market capitalization is the total dollar value of all outstanding shares of a company. Equity is a simple statement of a company's assets minus its liabilities. At its share price of $2,682.60, Google has a market capitalization of $1.774 trillion in February of 2022, and its total shareholders' equity as of the quarter ending December 31st, 2021 was $251.64 billion. The biggest stock split of 2022. Google parent Alphabet just underwent a 20-for-1 stock split following on the heels of Amazon's split last month. Monday marked the first trading day after Google parent Alphabet implemented its 20-for-1 stock split. The price of a single share of the company's stock became more affordable after the split, dropping from roughly $2,200 on Friday to $113, a drop of almost 2.5% on Monday morning. Retail investors and sometimes professionals are often enamored of stock splits, which lower a company's price per share by multiplying the number of shares available. But experts say a key thing for investors to remember is that the activity in and of itself doesn't change a company's fundamentals. A stock split doesn't change the trajectory of that company's performance, and there's no telling if share prices will rise after a split. The most important thing that needs to be understood is a stock split doesn't in and of itself make the company more valuable, as said by Keith Buchanan, Senior Portfolio Manager at Global Investments in Atlanta. If it's a stock an investor feels like is an attractive value, it should be an attractive value before and after the split. Nonetheless, investors tend to view stock splits as a positive sign, and companies often get a bump in their valuations when announcing and implementing the maneuver. According to Howard Silverblatt, senior index analyst at S&P Dow Jones Indices, Google's 20-to-1 stock split, meaning that anyone holding one share of Google before the split will have 20 today, is one of the biggest in recent history on the benchmark S&P 500 index. Are company stocks worth your investment after the split? When you buy stock, you want the price to go up so you can sell it at a profit. But sometimes a stock can become too expensive and the company thinks its high price might be discouraging to new investors. So they split the stock. Each share gets exchanged for 2, 3, 5, or even more shares. Each new share is worth proportionately less, so the total value of your position and of the company remains the same. A stock split has little impact on the position of existing stockholders except to hopefully entice new investors and drive the price up over time. Any decision to buy, hold, or sell Alphabet or any other stock should be made based on the fundamentals of the company overall rather than on the prospect of a stock split. The global cloud computing market is expected to reach a market value of more than $1.6 trillion by the end of the decade, so make your investment decisions wisely. If you like this video, make sure to hit that like button and do check out some of our other exciting videos on the channel. Catch you guys later!